to talk to you about why lenders don't like construction loan financing. And for me as a lender, but also as a guy who owns a successful construction company, I wonder why we can't figure it out. We being the total overall network of lenders and construction guys. Because the reality is a lot of people need construction loan financing. There's a way that they can make their value go up in their home if they're able to put the money into it, but accessing that money, quite honestly, is hard to do. And there's a lot of different layers that come into play, but my biggest problem with it is there's so much risk because of the way this whole system is set up for lending in general. Meaning when you as a consumer take out a loan, it's immediately packaged up and then sold off in the secondary market. Fannie and Freddie are still covering that nut, so to speak. They're the ones that's taking on that risk. But when it's a construction loan, technically that loan isn't done yet. It's not really perfectly packaged with a bow on it yet. Because guess what? You haven't done the work yet, especially for a new construction home. But for renovation work, it gets just as difficult. So you have a project, you said, this is what the home is now, and I want to make it this much better. But to do that, I need the money. I need to finance it. And most of these lenders have to take on the risk between where it is now and where it's going to be. That end construction, that finalized, final coat of paint is done with the home. Now they can say, okay, we've got it appraised and it's ready to go. It's that gap, the gap there that says there's a lot of risk here. Who's taking on that gap from when the value is here to when the value goes here, when the actual construction is completed? That gap makes a lot of lenders scared. If anyone's ever paid attention to the history of the financial markets, in 2008 when the financial world was collapsing, it was because there was no backing, so to speak. That all of a sudden the false bottom went away and everything just completely collapsed. When there's a construction loan, when it's here and we're going up in value, that construction portion of it, this risk, this middle section, is ultimately all on the shoulders of the small little lender. Because Freddie and Fannie, they don't want to take that risk on yet. They want the perfectly bowed package. So most lenders don't want to take that risk on, so they punt. They don't want to do this type of financing. It's a little too risky for them. With new construction lending, it's the same way. In essence, they're giving you, let's say you're going to build $1 million home. $1 million, the construction cost $1 million. The day that loan funds, they put themselves on the line. They're saying, we're gonna give these people $1 million to build this home. And they've got $1 million note sitting on a blank, vacant piece of land. If you default before that home is completed, guess what the bank owns? $1 million worth of nothing. That middle ground between land to completed is a risk. And that, my friends, is why most lenders don't want to touch construction loans. But the reality is, this entire market is so backwards, and there's all sorts of opportunities to create value with construction, that someone needs to figure it out and step up and make this streamlined, because the entire economy will benefit from this. And lenders, you guys who are struggling to make it figured out right now, if you can figure this construction lending thing out, you too will benefit, and you may just save your business.